Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about SOFI Technologies, ticker symbol SOFI, and we will be diving into the pros and cons regarding their reverse stock split, and the decision of whether or not shareholders are going to give the authority for their management to do and perform a reverse stock split is literally happening today. So we're going to be going over how this is going to impact the stock price, whether negatively or positively, and why some analysts and professionals do not want SOFI to perform a reverse stock split, along with the majority of shareholders, I would say. However, on the other hand, we're going to dive into why management is really pushing for this reverse stock split because they think that this is actually going to be very beneficial for the company. Then lastly, we're going to talk about how the SOFI stock price could actually rise around 47% because of its book value, which is on course to grow by around 5% each quarter on a compounding basis, which is going to cause SOFI's stock price, ticker symbol SOFI, to absolutely explode by around 47%. So for more news update videos on SOFI Technologies SOFI stock, remember to go and smash that like button right now. Comment your thoughts down below about the reverse stock split, what you think is going to happen, and how you think this is going to reflect on their stock price, whether for the short term or the long term. Subscribe if you are new, and without further ado, let's just jump right into today's story. So we're going to start off more with a bearish negative article about why investors and some professionals don't want SOFI Technologies to actually implement a reverse stock split. And remember, today we do not get to decide whether or not the stock split will take place. Today is just the deciding factor on whether or not shareholders are going to give management the ability to perform a reverse stock split in the next 6 months or so. If you didn't know, SOFI Technologies is a fintech company or a financial technology company that operates an all-in-one inclusive app which gives their customers anything they could probably need in terms of financial services and or financial products. Basically, they are an innovative fintech company that also operates as a digital traditional bank. Right now, the SOFI stock price trades for around $6 per share. However, investors as well as stock professionals think that the company should be worth anywhere between $7 and $22 over the next 12 months. However, that does not take into consideration any positive or negative catalysts. The board of directors are trying to think whether or not they want to perform a reverse stock split, but before they do that, they actually have to gain that approval from shareholders. Many investors think that the stock split is going to take place from ratios of 1-2 and 1-10. Now, for me personally, I think they're going to do a 1-for-10 stock split. That would be something that I would put my money on. And if you don't know what this is, basically the current stock price is $6, so if they did a 1-for-2 stock split, the new current stock price would be $12. However, your shareholder value would literally stay the same. It only affects the number of shares that you own, not necessarily your shareholder value. In the same instance, if they did a 1-for-10 reverse stock split, the $6 per share price would go all the way up to $60 per share, but again, it's only going to impact the number of shares that you own. It's not going to impact your overall equity in the company. One reason why management thinks this could be actually beneficial is that with the current stock price being around $6, this indicates that SOFI Technologies is a small cap company or a small cap stock, which trade at market caps between $300 million and $2 billion. However, SOFI Technologies has a market cap of around $5 billion, which puts it into the lower end of mid-cap companies. And a higher stock price could better communicate that to investors and potential investors into the future, because some investors don't like small cap companies because they believe they are too risky. However, what are some of the problems with the reverse stock split? Well, the first one is a psychological problem among investors, because in the investor's mind, a reverse stock split indicates troubles within the company and it brings negativity to the overall stock price, which could cause the stock price to trend downwards. And that's normally what a reverse stock split can imply. However, in my opinion, it's purely psychological and it doesn't actually change the fundamentals or the amount of value that you own in the company at all. It's literally all in investors' heads. Another reason for a reverse stock split could be that major indexes will actually delist company from their index, which consistently trade below $1. And if the SOFI stock price drops down that far, SOFI Technologies could potentially be delisted from the indexes that currently carry it. And this is why many companies would implement a 1-for-5 or a 1-for-10 reverse stock split to prevent such an occurrence from happening. However, for the majority of cases, this actually only delays these companies companies from being delisted, because even after a reverse stock split, the stock ends up falling back down to around $1 or below, and they end up getting delisted anyway. But in the case of SOFI Technologies, their SOFI stock price, I don't actually think is going to fall below or even around $1 per share. Because right now, current professionals actually project that SOFI Technologies will be one of the top performers compared to the rest of the lending industry. They have a very strong customer base of around 3.9 million customers, and their revenue growth is absolutely phenomenal, where they put up numbers in Q1 of year-over-year revenue growth of around 69%. So in my subjective opinion, a reverse stock split is unnecessary for the company to actually perform. However, if they do perform a reverse stock split, I really hope that investors don't decide to overreact, because it really doesn't do anything negative. It's all in their head. Nonetheless, I would say that this reverse stock split, which is literally being voted on right now, is unnecessary. I will make a follow-up video about this reverse stock split tomorrow to determine what happens, because this is more of a prediction video about the various things that can happen from this reverse stock split. So in my opinion, shareholders should reject this reverse stock split. It has negative connotations with it. It's going to cause the stock price to actually drop, in my opinion, and I don't think it reflects positively on a company that is rapidly growing. It's expanding their customer base, they're increasing their revenue, and the company is approaching profitability, which they're projected to reach in 2024. However, despite this, in rare instances, we have actually seen a reverse stock split cause a stock price in a particular company to actually increase or surge temporarily before then actually falling over the long term, as long as another catalyst doesn't increase the stock price. So although there is a small chance that this could actually cause a positive catalyst of the SOFI stock price increasing, but despite all of these reasons, why does the management of SOFI Technologies want to really have a reverse stock split? Why are they pushing for one, especially because it has negative connotations? Why would they actually want this? Well, first, they're trying to get rid of the penny stock label, because the SOFI stock price is trading rather low right now. Because according to their management, potentially this reverse stock split will help attract more investors, because it's going to put the company on the map with both retail and institutional investors, because institutional investors actually have some internal policies that dictate that they cannot buy stocks below a certain dollar amount, whether that be $1, $5, or even $10 per share. And this right now is preventing some investors, particularly institutional investors, into buying SOFI stock, because the stock price is too low, and they identify that as the company being too risky. So with the stock price increasing on a per share basis, this could actually gain SOFI Technologies some institutional backing. Now, for me personally, I do not buy that reason at all, but this is what management is thinking as of right now. Also, many retail investors, such as you and I, perceive lower valued stock prices as a more risky, volatile, and speculative investment, which is actually true in most instances. However, I would rather identify the company's market capitalization, or market cap, and their ability to grow their revenues as well as their earnings per share. However, management still thinks that this is going to be worth the risk to actually implement a reverse stock split if shareholders give them the authority to perform one as of today. Now, what many investors don't actually think about is that by doing a reverse stock split, it actually causes the SOFI stock price, or the SOFI stock price, to become less liquid, because it's reducing the number of outstanding shares, and this can actually cause the chart and the stock price to become even more volatile, which is not a really good sign for investors right now. However, because the SOFI stock price is being shorted pretty heavily right now, in my opinion, I really hope that this ends up causing a positive catalyst in some instances, which could be done through the shareholders denying this reverse stock split and not giving the authority to management to do this. This could cause the SOFI stock price to explode based off of the current short interest, because it could cause a short squeeze, which would inflate the current stock price. Now, some good news that I want to highlight is that insiders are still buying this company, and normally that indicates that the insiders, which would be the company's management, think that the company is undervalued right now. For instance, in the last 3 months, the insiders of SOFI Technologies have bought up around $2.7 million worth of shares. So in my opinion, again, SOFI investors are still going to see great long-term growth from this company, and if the reverse stock split does not go through, it could cause a surge in the stock price, which is what I am am looking for. However, if shareholders vote that management now has the authority to perform a reverse stock split, that in rare instances can cause the stock price to surge, but overall it's negative for the overall stock. But none of this impacts the long-term growth trajectory of this company. If anything, it's going to lower your price and it's going to allow you to dollar cost average and lower your overall cost basis for this particular company. So regardless about what happens here for the reverse stock split, why do multiple professionals think that the SOFI stock price is going to surge soon and have a fantastic comeback of around a 47% surge as long as their book value grows at around 5% each quarter on a compounding basis? Well, to get into this, I would highly recommend that you actually read this article, and of course I link all of these articles and my sources in the description box down below in case you want to do your own research and your own reading. But let me quickly summarize so you don't have to read all of these articles, which is going to save you time and money, especially if this turns out to be true. So right now, the SOFI stock price is trading at 1.1 times their book value, which according to professionals and stock experts is too cheap for this particular company. And if the book value grows by around 5% from quarter 2 through quarter 4 of the year of 2022, which is a current projection, that could cause the stock price to be worth around $7.91 on a fair value basis sometime in the beginning of 2023. That would equate to around a 31.6% upside potential from the stock's current price. So literally you are buying a stock that is undervalued according to professionals that also has fantastic growth over the long term. However, why does this matter for investors? Well, this matters because when you move the price to book value, you are also going to affect many other ratios, which is going to cause the future projections or 12-month projections by analysts to also increase more than what the company is currently worth on a fair value basis. So although the fair value basis for the company is worth somewhere around $7.91, analysts actually believe, with the current 11 analysts that cover this stock, think that the company could surge by around 47% over the next 12 months, which would give us an $8.83 price prediction. But even that comes up short from what the industry specialists think of this company, because these particular experts think that the SOFI stock price could reach $9.23 within the next year, and that would equate to around a 54% upside potential. And again, remember, these are not the bullish price predictions or even the positive experts. If we would want to look at that, we would get around a $22 price target on the high end and a $7 price target on the low end. These are the average price targets, which I actually put some personal weight in. So overall, this is phenomenal news. So the bottom line for this particular company is that SOFI is going to be very volatile over the next 3 months. However, in the long run, the company still has fantastic growth opportunity and nothing fundamentally about the company is changing. The only thing that's changing if the reverse stock split goes through is the amount of shares each person owns, and clearly the amount of shares are going to decrease, which is going to increase the per value share of their stock price. But I would love to hear your thoughts down below about what you think is going to happen. Smash that like button for more videos like this one, subscribe if you are new, and I will see you in the next YT video.